Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 27th of June, 2023. It is episode number 2491. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, Chicago air quality. Wow, it is really bad today. Check this out. Really bad. I guess we're getting the fallout from the um, Canadian fires, I guess. Um, Outside, it's kind of foggy. You can smell it. I went out for a jog this morning and realized that this is probably not the best thing for me. So I walked around the block and came home. Anyway, that's where we're at here in Chicago, where everyone else is in the market with the Convergent Trading pre-market summary sheet. Sorry, my throat's very scratchy this morning. Yet again, we have a mixed market with the NASDAQ bouncing this morning. The NASDAQ up 48 points after closing and settling at lows yesterday. But the key thing that I'm looking for today is a uh, is a bounce from here, and I'll show you why we're thinking that. If you recall from yesterday's charts, you might already know. But we're opening up in a mixed market this morning. Pre-market earnings, Walgreens is the big one. 35. It was expected at 34.25 billion, came out at 35.415 billion. Earnings, however, missed, came in at $1 a share versus $1.07 expected, so it missed by about 6.5%. The other one is TD SYNNEX. TD SYNNEX earnings 14.06, missed by about 2.5%. In revenue and earnings expected at $2.55, came in at $2.43. That's about it. After the close, not much there to talk about. U.S. durable goods this morning came in at 1.7% month on month for May. Versus negative 1% expected durable goods orders. Ex-transportation came in at plus 0.6% versus negative 0.1%, so pretty strong on that number. Canadian CPI came in at 3.4%, a whole 100 basis points below last month. Last month 4.4%, this month 3.4%. The expectation was 3.4%. ECB's President Lagarde, rates are to stay elevated for as long as necessary. We've made significant progress but cannot declare victory yet. KPMG to cut 5% of U.S. workforce, or about 2,000 jobs. And the Lordstown Motors, the EV startup, sues Foxconn and files for bankruptcy. That doesn't sound good. So that's that. Looking ahead today, we have the Case-Shiller. Well, not looking ahead anymore. Hang on. These numbers should be out. Why isn't it updating? Yep. Case-Shiller came in for, this is April, kind of stale here. Case-Shiller Home Price Index came in for April at 1.7%. The prior is 1.6, expected 1.5. Case-Shiller Home Price year on year is negative 1.7%, better than the negative 2.6% expected, where the house price index plus 0.7 versus 0.3. And then we're looking for consumer confidence at 10 a.m. this morning. The expectation there is 104. New home sales, looking for 675,000 units, and so on and so on and so forth. You can find a calendar and look those up yourself, of course. It just doesn't make sense to spend a lot of time on these. So That's where we are. The S&P is completely balanced overnight, has taken a pretty decent bounce right almost into the 43.89 prior week settlement, and has tested down and is sitting sideways. The inventory is 100% long, and 172,000 contracts have traded with 16 and a quarter points of range. The range is fairly normal for this time of day. The point of control again shifting down lower versus yesterday, moving down to 43.78. So this is how things are laying out for us in the S&P. The S&P, if you recall, the big plan yesterday with the weak double bottom that I talked about in yesterday's video, the big plan, the big test, I should say, was right there at 43.70. So here's yesterday's. This is from yesterday. 43.70 is what we're looking for, and as I said, we're expecting the market to test the downside, and that's what we're looking for in yesterday's session. Instead, it's decided. So I also said yesterday, this is yesterday's video, overall again, the path of least resistance is downward. And we challenged the prior settlement expecting a choppy open this morning, and so on and so forth. We didn't get a choppy open yesterday morning. Of course, you can always go back and see that video. We didn't get a choppy open yesterday morning. We ended up rallying, actually. Rallying right off the open, and then finally giving it up. It was kind of there was nothing I could do with this rally yesterday. It had a bit of a drive in it. It moved down 2 ticks and then immediately drove, and it created separation between the RTH levels and price. Also, when we left the overnight session, when we left the trader bite, the delta was pretty low at that point, and then it immediately went to zero. And then as soon as it made a high, lower high, this is where we start to look at the short side. The short side sets up a mid pullback. This is a setup for me, as you all know. Mid pullback, looking for the continuation to at least this low here, the impulse low. We finally managed to do that, pull right back, and then continued, and it took forever to get down into the 43.70. I wasn't here for this. And then since then, so we get down into the 43.70-ish, and through into 43.6850 yesterday, end up settling at 43.70 and a quarter, and then bouncing back up. And then we have this overnight session, which is pretty much balanced. 100% of the inventory is above the settlement price and the close, and we have VWAP mid right on top of the overnight point of control. So we're coming into a very balanced overnight session. So this is where we, kind of sit back and wait for the market to break away from this area before we engage. So this morning, if it doesn't chase, if they don't chase buyers, chase the sellers up immediately, then it's likely to be a pretty lazy, quiet day. If we look at the overall picture, what we've done, and remember I drew these levels a while ago. We have this excess high right up here, and all we've done is put in lower highs and lower highs and lower highs and lower highs and lower highs. So the one time framing's down. The path of least resistance is still to the downside. And then today, what's really important is we want to see, do they attempt to pull back towards the, this is the NQ, folks. The charts all look the same, right? So let's repeat the exact same thing. Excess high, lower high, lower high, lower high. I thought those lower highs were looking odd. Lower high, then we get to 43.70. This is really important. So you could see it's kind of working these levels, right? It's working these levels. And so it's really important for us to see if it moves lower today, then it's not able to take out the 43.70, and an impulse is up, then we're looking for it to push into this 43.84, 85 area, and then once it takes that over, we're expecting, you guessed it, 44.05 again. That would be this area right here. This would be the response from the retest. If it moves lower or tries to move up and fails, and then moves lower into 43.70, gets through and is weak on the pullback, then we're looking for shorts, and we are aiming for the next area down, which is 43.50. Could take all day. Okay, so those are the two main scenarios today. Gives us about 30 points to the upside, gives us about 30 points to the downside from where we are, being very conservative here. Not expecting much more than that, but the selling yesterday was pretty good. The NQ actually caught up with the ES in terms of its weakness, right, to the downside. But if we look again, if we monitor how these, if we drew a straight line, let's see if we can do that. Up. Nope. Didn't like it. Nope. If we drew a straight line from point of control to point of control, you can see it accelerating a little bit, but it's, the idea here is we tend to slow down into, when we look at the point of control, we tend to slow down into the turn. Didn't do so over here. We had an excess high, but this is what I'm expecting today. I'm expecting it to retest and make sure that this is solid support here, and if it does, it could really tear up the shorts all the way back to where, again, 44.05, but the key number that it wants to come back to probably is 44.16. 44.16 brings it in balance, and that tells us that it's kind of found the other extreme, the other side of balance in that situation. Okay, so that's the main scenario for the ES NQ. So it was relatively stronger. The NQ again doing the same thing: lower high, lower high, lower high, lower high, lower high by only a handful of ticks, excess high. Okay, and I talked yesterday about the weakness from the 12th here. I believe that was the 12th, yep. The weakness from the 12th, and this is the most likely test area right here. Right? We covered this a lot. So we're looking for 14.864 to 14.855, something like that. And yesterday it shoved its way right down into 14.853. 14.853, and it settled at 14.856.50. Yesterday's 53.50 is the low. I wish they would go to full points on the NASDAQ. Would make it so much easier to trade this thing. But this is what we've got. We built a nice little base here. Overnight, all we did is trade this base and then start to kind of wedge our way up into 14.937. But what you notice in the overnight session, this is the overnight high right here, 37. This is the overnight low. It remained right in that sharp node at the bottom of the range. Okay, so it remained right in here. So it's very important to see what happens at 14,950. This is going to be your LIS today. Your line in the sand in the NQ is 14,950. If it's not able to challenge the 14,950, then it's very likely to re-challenge the 14,850 3.5 that it put in, and it's very likely to start moving lower towards the 14,750 and so on. So here's the map for the NQ. NQ's been doing pretty well with this map. Then it goes to 14,800, 14,700 with the 14,750 naked point of control here. So this morning, if we don't, retest maybe a higher low, get an impulse and respond and challenge up into the 14,970, 80 or so. I think 14,980 is the number, something like that. Yep, right in there. If it doesn't challenge that right away, then the NQ is very likely to retest the 853, and then from there 14,800, it opens the door for 14,800. So it's all about, remember, trading is not about going and finding trades. If you catch yourself looking for trades, you're just zooming in real tight, you start to look into your charts really zoomed in, like, hey, is there something going on here? Changing time frames, like, be wary of when you start to change your time frames, or moving to something like a heat map to see what's happening on a micro basis. Unless you're there to execute or to hone in on execution, if you're stalking trades or trying to figure out what the market is doing by going down to that level of detail, you're in trouble. You're automatically in trouble. All of the trades come from a higher time frame, for me, they come from the TPO chart, which carries into the intraday chart. And then we move into this chart to see, okay, what have we got? Okay, we have a slightly higher, blah, blah, blah. This is this. We're clear up to 980 or so, and I'm leaning against the VWAP, or I'm leaning against, this low volume node right here or something. Then it just becomes about, where do I execute? How do I define risk? And you execute off this chart or the order flow chart. Your order flow chart or something like that. Now you're looking at more detail, like, where's the volume here? What can I lean against? But if you're using a footprint chart or a heat map or a very short-term chart to find trades, in my opinion and experience, this is not a sustainable. You can get away with it, but it's not a sustainable career move. As far as I'm concerned. Okay, so it's just warning you about that. And today is the kind of day that's likely to kind of suck us in. The crude couldn't give two hoots about what's going on in Russia. Crude, when you have a conflict in an oil producing country, crude has a tendency of popping higher, and it just doesn't care. It's still holding below the 70, still definitely holding below the 72, which is the mid of this entire section of trading, range of trading. And it's the fact that it's staying below 70, to me, it just seems like it's accepting these prices. I mean, look at where look at where acceptance is. It's right around the 72. That's the point of control, and it's building. It's continuing to build acceptance down here. As soon as that happens, as soon as that point of control shifts down, the market will either have enough fuel to squeeze back up to the 72, or more likely, it's likely to seek lower prices. I'll leave you with that. That's a lot to cover. I'm going to let you go. Good luck today, and just mind your risk, and don't forget to hit the like button on the way out. If you're not a subscriber to the channel, please subscribe. It is free, and it helps promote the channel to other traders so they can approach the market more holistically like we're doing here. So subscribe and like, very much appreciated. Take care.